India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call, coming to you live from the CNBC TV 18 Motilal Oswal studios. It's an interesting day. Globally, we've had central bank days. Today, it is our turn. Central Bank Day, RBI Day this Thursday. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, say good morning.
Hi, good morning. Lots of cues today, but the market is also quite volatile, actually. The US markets didn't have a good close. So let's see how things shape up.
Well, I think, there'll be more or less a range-bound trade till around 10 a.m. And then we hear what the RBI governor has to say.
It always flattens out, quietens out into that RBI policy. And then we have something. What do we have today? That's essentially the question, right? So 2 hours to go. The clock is ticking. Let's just quickly rewind the clock back, though, for now and tell you where we left off yesterday. And, I mean, global has been the driver, of course, and one was hoping that after the strong 300-point higher close yesterday on the Nifty, you'd sort of wake up once again to positive cues. It was not the case. So despite a strong 1.5% plus rally in the pre-market in the US, equities ended in the red. Actually, it was a day of two halves on Wall Street. First half positive, second half in the red. So it was a bunch of weaker earnings, lackluster 10-year auction, bond auction, treasury bond auction, and a bit of a spike in oil prices, which I'll get to in just a bit. Equities closed lower. So the final close, S&P down about 3/4, Nasdaq down about 1%. You had the Russell 2000, which is small caps, broader markets down almost 1.5% as well. The CBOE Wix also spiked. And it was interesting because, I mean, the spike in Wix happened right after mid-afternoon, after that very poor response to the treasury, to the bond auction. So Wix was, the low was about 22. It spiked to 29. It left off in the 27 handle somewhere. So a bit of a spike coming in from the lows. The 10-year yield in the US, that jumped about 6 basis points. We're at about 3.95. It got to within the cusp of making it to the 4% mark. And that is actually even true for the 2-year. The 2-year is also flirting with that 4% level. That is the front end of the yield curve. Yen weakness was sustained. USD JPY, it ended at 146.9. The recent low, the recent high on the yen has been 142-ish. So we're about sort of 4 handles away, and that is good. Oil prices 2.5% higher, 78.4. But it was not just oil, by the way. Lesser talked about, but natural gas prices are also at a new high. And this is all related to, of course, geopolitics. Dollar index was flat. I think that is the one indicator, the fact that equities sold off. There was a bit of a move in rates. Oil prices were higher, but the dollar, not very much by way of a reaction. And that sort of leads me to suspect that maybe a lot of the moves that you saw overnight was in response to positioning, just pure positioning, because there was no real big macro data or anything of that note. But you have macro data later today. Initial jobless claims will trickle in, and if the numbers actually are much lower, it'll soothe nerves with regards to the weakness in the US labor market, which is essentially what last Friday started this phase of US market weakness and the growth scare, etc., etc. So that's, of course, later today. I'll just sort of circle back to the levels here. The Nifty yesterday ended above the 40-day exponential moving average. Solid 300-point gain. It did not cross Monday's high. So we'll need to Tuesday's high, beg your pardon, the prior day high. So we'll need to get past that. But the big near-term resistance is the gap area, 24,350 to 24,686. You have this gap, and that's essentially, to my mind, the big hurdle that we need to cross if the market's sustaining and wants to move even higher. And of course, I mean, by the way, it also coincides with the 24,686, the upper end of the gap area, coincides with the 61.8% retracement of the recent decline as well. Now, support for the Nifty comes in at the swing low, which is 23,893, which is, of course, just 3 days back. So that's the support which the market must not break. Nifty Bank has been way weaker 3 days in a row. If you look at the Bank Nifty candles, we've hit the 50% retracement and we've bounced. Yesterday was no different. Yesterday was a positive close, but was it a convincingly positive close? I mean, I think that's essentially the question. Now here, the immediate resistance is again that gap area, much smaller gap, but the lower end of the gap area is 50,747. That's the first level to cross. The 40-day exponential moving average will be the next resistance, which is 51,132. And on the way down, once again, like the Nifty, the swing low will come into a place which needs to be defended, which is 49,659. I mean, one hopes, fingers crossed, that you get basically an indication, an acknowledgement from the RBI as well, that they are paying attention to the global markets, because very quickly the mood has turned. There was time, there was runway for central banks to gradually start to ease, but a lot of those expectations have been brought forward. So will the RBI acknowledge some of it? I think that could determine markets and what they do post 10 a.m. once we hear from the governor. GIFT Nifty will come up on your screen, and that'll give you an indication. 180 points lower is what the indicative opening is looking like. Sonia.
Absolutely. So one thing is for sure, right, that the volatility in the market has not subsided just yet. And that's really the big thing to watch out for. Despite the market being very resilient, global markets are not great. And today there's a big event upon us, which is the RBI policy in 1.5 hours. As Prashant was saying, there's no rate cut expected this time around. The stance is expected to remain unchanged, but let's see which way things go. If you look at what's happened in the US markets, there's been a steep decline overnight. The Dow is down about 230 odd points, the S&P 500 down almost 40 points, so not looking good over there. The US initial jobless claims data comes out later today, so we will be awaiting that number as well. And in terms of our own markets, amidst all the global volatility, our markets have been quite resilient. The Nifty has been holding on to the 24,200 mark, but there was large selling once again from foreign institutions yesterday. So FIs sold about 3,300 crores in the cash markets, while DIs bought 3,800 crores or so. A lot of results today coming in, both index and non-index large caps. There's Eicher Motors, Bharat Forge, MRF, Soba coming out with numbers, and a lot of results to react to as well. So we'll do that in some time from now. But for now, the implied opening suggests a steep fall, about 170 odd points. So it's, 2 steps forward, 1 step backward for this market, given the kind of volatility we've seen.
Well, indeed, Sonia. Let's focus on the top cues then that we're tracking for today's trading session. The RBI policy, well, that's top of mind, is something that we're looking at. We'll have the Nifty weekly expiry that will play out. And later in the day, from the US markets, you'll have some jobless jobs data, which has become another very, very important point from a global market perspective. What did I like about yesterday's trading session? Yes, we ended higher, but what was good was that, in fact, we're making higher lows on a day-to-day basis. So that's important. Yesterday as well, we went to around that 24,185 odd. Today, in all probability, that gets breached. So we'll have to see how that goes and how the dip gets bought into or not. What about positioning? The FIs as well as clients, now both of them are net long on the index futures. So the FIs, the long positioning, remember, was more than 1 lakh contracts. That's come down to around 64,000 contracts. And the clients, from being net short, they have moved to around 10,000 long contracts odd. But what is encouraging and what's telling you it's going to be a stock-specific market is that the stock futures, out there it's consensus. Both of them are net long. The clients, they're aggressively net long. They've been in this vicinity of around 18 to around 20 lakh contracts on stock futures. So stock-specific market is very, very important. Nifty PCI, yesterday it went down to the lower end of the band of around 0.7, and that could be one of the technical factors at play. And that could be the reason that, in fact, we did see a bit of a bounce. Now it's moved back to around the 0.9 odd. So it's more or less in the middle of that range of around 0.65 to around that 1.3 odd that we have seen in the recent past. 2 strikes very active, 24,400 call, 24,100 put. So putting in the options data and putting in the recent levels as well, let's get the support level up for you. Since we're seeing some writing at the 24,100 put, well, the support for the day comes in at around 24,050. The crucial number is 23,800 because from there we have seen a bit of a bounce. So that's the line in the sand. But for today, we're going to be starting off closer to around the support. So that's going to be the important level. On the upside, 24,450, that's important because the 24,400 level has been seeing a fair bit of writing. So that's going to be the crucial resistance zone that you're looking at. The Nifty Bank, well, the 100 DMA is important. That's the one that we're tracking. So keep an eye out on that one. While resistance, earlier in this week, we went to 50,700 and we did a U-turn from there. So that's the important mark on the Nifty Bank. You don't want it to breach this level of around 49,500 odd. Couple of stocks have come out of the FNO ban, Chambal Fertilizers as well as Granules. So I'll keep an eye out in case there's some action on both these two names. For starters, we start off very, very close to that support zone. I'll tell you what, the bulls will be hoping not to get any shocker coming from the RBI governor and hoping that from the low point of the day of around 180, 200 points, we do see a bit of recovery. So let's see how that goes.
All right, Nigel, thanks very much for that.